Okay, so we're gonna watch the charts live after China and US have announced their tariff pause deal. I think they've also slashed their tariffs as well. Just gonna make sure that we're actually live real quick. Yeah, we're live. Okay, so if you're sat here watching the charts thinking, what the fuck has just happened? It's supposed to be a no news Monday, and we've had an extremely large daily candle, and we're only we're only 2 hours into London Open. So you're probably wondering what's happened. Well, let me explain that real quick to you. Essentially, um, the US and China, they've reached a significant agreement to de-escalate the ongoing trade war. So they're going to reduce tariffs from 145 to 30%. So the US will lower tariffs on Chinese imports from 145 to 30%, while China will reduce tariffs on the US from 125% to 10%. Um, so they've also going to implement a 90-day halt on new tariffs. So that provides a window for further negotiations and whatever this means right here. So essentially, this is quite positive short term, at least for the dollar, because essentially, if I just get this up right here so I can remember, um, the tensions of like between the trade war create fear of slower growth in the economy, all right, or economic disruption, and it signals instability. So investors don't feel as safe putting their money in the dollar um, when there's a ongoing trade war. Whereas now, obviously, we know what's happening at least for the next 90 days. So that brings a lot more clarity and certainty to the markets. Um, it also means lower costs for businesses, better profit margins, and potentially more consumer spending, which boosts future earnings and good for stocks. So that's going to bring more investments into the dollar, because also basically countries and large investors will convert their currency into the dollar so they can buy US assets, right? So that also boosts the DXY, and that's why the DXY has had a large pump this morning, up 1.18% in a single day. So, well, in like 2 hours since we opened. So it's a big ass move basically. Because I was thinking, right, Monday is going to be a slow day because we got no news. But actually, there's always something going on that's crazy that impacts the market. So you've got to be aware of these type of things. And I would suggest that you use this website right here, fxstreet.com, and then it basically will just update you with the latest news. So if you see a massive candle, you can basically just hop on here and be like, what the fuck happened? And as you can see, breaking news, US to lower tariffs on China. So you can see what's caused that massive move, because it doesn't always show up on FX replay. Not FX replay. It doesn't always show up on Forex Factory, I mean. So yeah, it increases the demand for the dollar because people want to buy US assets, so they've got to convert their currency. And also, this thing as well. If the US economy looks more stable than others, like the China or the EU, US interest rates might stay higher. And like I've said before, essentially, if the interest rates are higher, if people are buying bonds, they're going to get more return on their money. So that means it's more attractive for investors to buy bonds because they're going to get more return on their money than elsewhere. So that also strengthens the dollar as well. So that's why it's good for the dollar for at least the next 90 days, it should be good for the dollar. And that's why we're seeing such a massive move right now in the DXY on a no news Monday, if you was wondering. Because I remember when I started out, massive moves, I would have no idea what's going on, right? I'd be like, why is that just happened when it's like no news today? So you got to be able to stay on top of it. So a good website to use is obviously fxstreet.com, and you can just look at the latest news as that comes out. So yeah, for the DXY, we're having a deeper retracement basically into this weekly range right here, from this high to this low. We're having a very deep retracement. I would like to see how we actually end up closing the week around this fair value gap. Are we going to close above it and then use it as support to push higher into this range, right? Or are we going to leave a large wick up here and everyone's just excited right now, and we're basically hitting this order block right here, and then we're going to leave a large wick and start coming down like that, right? So I would like to see what happens, how the daily candle closes, what the weekly candle will look like. But for now, yeah, I mean, a large injection of volatility right now. So that's always good though, because it will help you form a bias, form a stronger. If we have a clear directional move, it helps you form a much stronger bias. Okay, so all correlated assets are down basically. Inverse correlated assets are down, like GU, EU, UCAD's up, and then USD JPY is also up as well. The funny thing is, right, it's crazy because you look at the charts and you think, right, I can see that happening, but how does it happen? Because the charts are so sloppy. If you tuned in the other day when I think I was just trading live, essentially, we were saying that we would like to see on EuroCAD, we would like to see the midpoint of this order block get hit. And I was thinking, how are we going to get there? Like, it doesn't necessarily look like it could do that, especially because we kept pushing higher here. But then all of a sudden, some crazy news comes out, and every level that you are expecting to see get hit in the market gets hit. So it's crazy. I honestly sometimes feel like the charts forecast future events. If you know what correct levels to look at, it's like you could have predicted potentially a large news injection at some point that would take us to all these levels. Gold and silver are down because obviously they're safe haven assets. So when people are uncertain about what the hell is happening, when there's tariff war, when no one knows what's going on, everybody flocks to gold and silver because it's a safety. It's safe haven. So people flock to it for safety basically. But it's down 3% this morning because obviously now there's more certainty and clarity for at least the next 90 days. So in terms of gold, I would like to see this. I would like to see this weekly fair value gap get hit, right? Because last week we wicked above the previous week, right? Leaving a large wick above candle right here. And that typically will signal that the next candle is going to expand lower. So we've got this fair value gap as a drawn liquidity, this swing low right here. And also, if we look on the daily, gold basically came up and hit this rejection block right here. Rejection block is the last up close candle. Is the last wick at the top of the range, basically, or at the bottom of the range. And we're obviously in the right side of market maker sell model right here. So this is the left side, and then this is the right side. So this will be the draw on liquidity right here, that low. But yeah, what else is there to go over quickly? I thought I'd hop on here and show you guys why the market's moving crazy this morning, even though it was supposed to be a no news Monday. Because yeah, I know that back in the day I would have not known what was going on. Yeah, so we'll just have to see how the rest of the day finishes up printing. I reckon probably no more trading for the rest of the day, especially after such a large volatility injection. Like the rest of the day is probably going to be very slow. You're better off waiting until probably post CPI now. But to be honest, I even wonder if CPI will do much of anything now, because recently, whenever any tariff news has come out, the following high impact news event has basically done nothing, because all the volatility has already been injected into the market. So if you've been paying attention recently, like FOMC didn't do anything. I think maybe was it last week, or it was like the previous CPI. It didn't do anything after tariffs were introduced and the volatility was already injected. So I do wonder if tomorrow we'll even see anything crazy from CPI. But it's good though. It's good. Getting a strong directional move means that later in the week we can have a stronger bias. So yeah, it's not going to be a long stream, just a short one so you guys can know what the hell's going on. I think crypto's up, stocks are up, indices are up. So S&P's up 2.5% this morning, and NQ is up 3%. So this would be really good for crypto as well. Hopefully, because crypto follows the stock market, right? So if the stock market's doing well, crypto will do well. I don't think crypto's ever gone into a bull run without the Russell 2000 breaking out, and the Russell 2000 is basically, I think it's like the top 2,000 US stocks outside of the S&P 500. So these are the large cap, these are the smaller cap. And RTY basically represents an expansion in the, I think a broader expansion in the stock market, where money flows out of the S&P 500 into the rest of the market because there's a lot more confidence in the market. So money flows out to all the smaller stocks. I think I'm correct about that, to be honest. So it's good to see the Russell 2000 up, because crypto will usually follow the Russell 2000 as well. Bitcoin's up. Honestly, expecting new all-time highs for Bitcoin soon. XRP is looking good. So yeah, this is good news. This is good news for the next 3 months at least, and hopefully they come to a good trade deal. But yeah, I'm just going to keep paying attention to the markets, and then probably look to trade later in the week. Now we've had such a large injection of volatility. So yeah, hopefully that's cleared some things up for you guys. If you've just tuned into the stream right now, basically the US and China have come to a trade agreement for the next 90 days. US is lowering tariffs on China, and then China is lowering tariffs on the US. And so that That's good news for the DXY, and it's good news for the US economy in the coming months. All right, boys. Hopefully you enjoyed that one.